Hello and welcome. You're watching Your Trades on ET now with me, Snehisha, and with me is Priyanka Uppal. And Priyanka, well, we can't be too happy about today's trading session, but well, there's absolutely nothing to be very sad about it as well, because Nifty managed to recover a slight bit towards the end of today's trading session. A good 70-point uptick coming in the last 15 minutes or so of the trading session, and Nifty did close in the green with a very slight negative bias. So, well, that's what happened when it came to Nifty. Bank Nifty also recovered pretty smart towards the end of the trading session, and up 180 points off the day's low as well. Top Nifty contributors then the likes of M&M, Tata Consumer, HDFC Bank, SBI, Bajaj Auto, all of these stocks made sure that the Nifty ended the day in the green, no matter how slight positive bias is. But also let's take a look at what the market shaped out and ended the day to be like. And even when you take a look at the broader markets, then Nifty Midcap and Smallcap, well, they have managed to end the day in the green. Midcap at least doing pretty well for itself, up 1.1% as that's the move coming in on the Midcap index. And even when you look at small cap also up 1.2%, but Nifty however managed to stay above that 22,400 mark. So well, that's one good thing that we're watching out for. Nifty has ended the day with a very slight negative bias, pardon me. It slipped into the red just towards close. So that's the move coming in on Nifty today. And even when we take a look at what's happening in the sectoral indices, then IT was the biggest loser today, down 0.6%. Followed by services and finance and pharma. Pharma also down roughly 0.2%. On the other side, you had metals. That basket shown beautifully today. That was shining up 1.5% on an overall basis. Auto index was up on the back of some very strong auto updates that we got yesterday for the month of March. So that index also up 1%. Realty also up 1% on the back of that brokerage note that we did see in the morning on the companies like Soba, Prestige, and the others from the Realty pack. PSU banks also did pretty well for themselves, up 0.8%. But when you take a look at the broader markets, you had stocks like Vodafone Idea down almost 4% in today's trading session. V-Mart, India Mart, Indus Towers, PNB Housing, Triveni Turbine, Hero Motors, Chalet Hotels, Kaveri Seeds, all of these stocks were very down in today's trading session. On the other hand, then how can we not talk about Aditya Birla Fashion Retail Limited? That stock did wonderfully for itself today, closed the day with an uptick of 12% on the back of that demerger news of Madura Fashion that will be listed as a separate entity. TCNS Clothing also, that is owned by Aditya Birla Fashion, did pretty well for itself. That stock also ended the day with an uptick of 11%. Tanla Platforms, AB Capital, Varroc Engineering, Symphony, Linde India, Orient Electric, Godfrey Phillips, all stocks have ended the day with very positive gains of anywhere between 8 and 12%. But with that, let's also get a move on then and talk about the other newsmakers in today's market session. Priyanka, and what were you spotting?
In fact, Sneha, I'll say what a great day for the broader markets. People
indeed.
who've been holding metal stocks since last week. You talk about the biggest of the gains which came from sectoral indices like metal, auto, and of course, there was still strong business updates from banks coming in. We've been tracking South Indian Bank. CASA ratio was about was at 32%. Strong jump on Y-on-Y as well as month-on-month figures. In fact, CUB also posted strong business updates, and along with that, IRDA also highest level ever loan sanctioned with a jump of 26%. These were the some of the stocks which were of course part of the top news today. Other than this, there was an exclusive by ET now only, which was Invesco Limited is exploring various options to sell an equity stake in Invesco AMC. There is a possibility of even exiting the entire AMC business. That was one exclusive. We will talk in detail also later in the segments. And then there is another eye which we would like to keep on will be the GST Council, which is about to prioritize its rate rationalization in its meeting, which is slated to happen post the elections. And there is a possibility of merger of slabs also, which can be probably on the agenda for GOM, a meeting with the group of ministers. Well, these were the top of the headlines, but then let's understand that how are indices doing at this point in time, and where is Bank Nifty headed towards? So Kunal Bothra joins in for more details on the indices and the levels to talk about. Kunal, good afternoon. Clearly, Bank Nifty was a star performer today, the way it recovered, and the kind of, let's not forget the rollovers we saw in the March series, at the start of the April series. Is Bank Nifty headed for a new level now?
Well, first of all, and the data on the Bank Nifty is very, very intriguing, because for the first time we've seen at the start of a first fresh day of a monthly expiry, there has been a drastic reduction in the open interest for Bank Nifty. So there was almost like a 41% drop in the open interest for Bank Nifty yesterday, cumulatively for both series April as well as May, which is current and the FAR month. We've seen a significant drop in the OI. That generally indicates that short positions have been unwounded into the banking index, and that generally is an indication that we could see more legs on the upside. Now, the concern with the market so far is the lack of private sector banking stocks performing, because on one hand you've seen HDFC Bank showing signs of outperformance, ICICI Bank being a bit more resilient, but then the likes of Axis, Kotak, etc., they are the ones which are showing signs of struggle. So I would probably believe that we could be into a phase where the markets may continue to move up higher, but if the banking stocks, large cap private sector banking names, if they start to move up higher significantly, then we can see a very strong surge of momentum.
All right, Kunal, thanks for sharing your view with us and our viewers. But amid a market like this, where we've seen broader markets have been rallying over the last 2 or 3 trading sessions, help us understand what's made to your radar and what are you picking out?
See, I'll go with 2 buy calls on the mid-cap arena. The first one is PAN AB Capital, something which I've been bullish on from a decent period of time. The stock today gave a breakout finally above the 200 mark, making it as a multi-year breakout for AB Capital. So would suggest a fresh target of 210. Stop loss could now be trailed to 192 for traders who are looking at a fresh buy at current levels. And second would be upon India Bulls Real Estate. Now this could be a very significant kind of a breakout for the stock. It's come out of a huge patch of consolidation, almost like a 27 to 30% range of consolidation for the stock. So expecting a very strong up move for India Bulls Real Estate. 140 as an immediate target, but expecting much more on the higher side. Stop loss kept at 118.
All right, 2 interesting stocks. AB Capital, after a stellar move, you still see upside, and the second stock is India Bull Housing. Thanks very much, Kunal, for both the recommendation and sharing your view on the indices. Now we have Srishti joining in to talk us about the stocks that she spotted on the breakout and the breakdown level. Srishti, what did you spot, both on the long side?
Well, yes, both the stocks are on the breakout side that we wish to highlight for our viewers. The first counter is IOC. This particular counter is seen to be breaking above its 20-day moving average in today's trading session. All these OMCs were once again getting back the flavor, and what we have spotted that this move today was actually taking a bounce from its 20-day moving average and very well supported by a long build up on the derivative side. Moving on to the next breakout stock then, and let's have a look at Granules India, because some of these pharma names are holding up pretty well, and Granules India was once a stock which was up over 1% in today's trading session, and the similar story out here as well, because after a fall, because in a long while from now we have seen the stock was actually in a good uptrend, but with the fall in the March, the stock was under pressure, but once again seemed to be resuming its journey upwards, taking a bounce from its 20-day moving average, very well supported by a long build up on the derivative side. So these are the factors that we spotted on Granules India, and hence the breakout. Back to you.
All right, Shrishti, well, thanks so much for taking us through that. But remember, viewers, we've been seeing some rally coming in the broader markets over the last few trading sessions. Even today, the broader markets, both mid-cap and small cap, have managed to outperform the benchmark indices. But what's ahead for the broader markets? To understand this, we caught up with Tahir Badshaw, the CIO at Invesco Mutual Funds, who spoke to us about the correction in the broader market. So listen in to his view and what he thinks lies ahead for this mid-basket of stocks.
We've been maintaining this look. The backdrop, especially for the broader market, which has been, under the radar, and where there was an expectation that there was an excess which had been built up. Perhaps we did see a decent correction of a certain magnitude, probably about 7 to 9% at the indices level. And I think that's what you will probably get in an environment where, the background as far as earnings and the overall macro construct is still reasonably positive. We did get a little bit of that regulatory scare as well, and that probably also contributed. But I think that is exactly what you're probably going to get up until the time you have a situation where the domestic economy is expected to do well. I doubt if you will probably get very, very punchy corrections.
That's the view coming in from Tahir Badshaw. Now let's move forward. SEBI chairperson Madhuri Puri Butch, she was speaking at the CII Corporate Governance Summit, and she spoke about Indian markets also. Let's listen to it. What did she say?
Why is it that our markets are commanding? And this is, I think, an achievement for each person in this room, because you are the ones who are commanding this price to earning multiple, which is higher than not only the averages of the world indices, but you can see there the comparison with various nations. So at 22.2, yes, some people say we are an expensive market, but still why is the investment coming? Because this is a reflection of the optimism and the trust and faith that the world has in India today, that we are commanding these kind of multiples in our markets.
All right, well, that's the word coming in from the SEBI chairperson. Reviewers, we'll slip into a short break on this edition of Your Trades. We'll be right back with more news and updates about today's market session, so you stay tuned. Hi there, welcome back. Let's continue with the show and let's talk about the stock of the day, and that without a doubt has to be Aditya Birla Fashion and Retail Limited, or also known as ABFRL. Now, this stock was in focus today, up 11.5% in the day's trading session. At one point, it also went as high as 15%, but then fizzled off those gains. But nonetheless, 11.5% higher is where the stock has closed at. Now, this uptick in the stock came on the back of the demerger plans that the company went ahead and announced to list Madura Fashion as a separate entity. Now, after listing, this company will have an identical shareholding of that as Aditya Birla Fashion, so the demerging ratio will be 1:1. A little bit about the company in terms of the financials. Now, Madura accounts for 2/3 of the revenue of ABFRL, and it is a cash flow positive company with extremely high and positive return ratios. Let's understand what the product portfolio of Madura Fashion is, the key labels that come under this brand, and well, lots of marquee names like Louis Philippe, Van Heusen, Alan Solly, Peter England, American Eagle, Forever 21 and Reebok. So well, quite popular and large labels under this brand. On the other hand, you have Aditya Birla Fashion. Now, brands are still in the investment phase when you talk about the labels that come under this portfolio, but they do have a whole host of companies across segments. From value retail, they have Pantaloon as well as Style Up. From the ethnic portfolio, they have TNS, which, by the way, that stock also ended the day with an uptick of almost 11%, and Taswa, Sabyasachi, SNN, Jaipur and House of Masaba when it comes to the ethnic portfolio. On the luxury end, they have the Collective, Galleries Lafayette as well as others, and for its digital branding, it has TMRW as well. Now, let's understand why this demerger is taking place, and it's taking place for 3 reasons. First is value unlocking for the shareholders of both the companies, AB Fashion and Madura, after it will be listed. It's also being done to boost the stagnant valuations that the company is seeing at the point, and it's also being done to simplify and streamline the corporate structure of the company. What's going to happen after the demerger? Well, post the demerger, Aditya Birla Fashion will be raising funds in the next 12 months to boost their balance sheet and to infuse some funds into the company. When you compare both of these companies side by side, let's look at AB Fashion and then let's look at Madura Fashion as well. Over the course of FY20 to FY23, or even when you see it from a 9-month FY24 perspective, Madura Fashion has consistently outperformed Aditya Birla in terms of revenue or in terms of EBITDA. But let's also zoom out a little bit and compare Aditya Birla Fashion with its peer, which is Trent. When you look at things from a 3-year CAGR perspective, revenue for Aditya Birla Fashion Retail over a 3-year CAGR has seen a growth of 12%. On the other hand, Trent has grown 33%. EBITDA then for ABFRL at 17% and for Trent at 47%. But the most striking comparison metric is the stock price, right? Because over the course of 3-year CAGR, the ABFRL stock has moved only 2%, but Trent has seen a solid up move of 73%. Now, there is still some uncertainty when it comes to the post-demerger stage, and what the street is unclear on is the division of debt. Now, after the fund infusion by GIC, the debt on the company's books, which is ABFRL's book, is estimated to be roughly between 2,800 crores and 3,000 crores. So going ahead, the street will be closely watching how these two companies divide the debt when it comes to the division of the two companies and the demerger. So we'll be watching out for that going ahead.
All right, that was AB Fashion, which was making news today. But not just the AB Fashion, from the entire group, we must talk about AB Capital also. In fact, the entire pack looks so buzzing. What are the reasons? Staying with the Aditya Birla Group, let's look at the group overall and the slew of announcements which the group has made, ranging from the textiles to metals to cement, the moves to interact the market positions across the sector. Let's bring in Ashesha to explain us more on this. Ashesha, please explain this in detail.
Slew of corporate announcements and restructuring announcements that have been announced in Aditya Birla Group over the last few months. Let's talk about them one by one. First up, let's talk about the disruption that they've promised to do in the paints industry through Grasim, where they say they are targeting 40% capacity addition and they are targeting 10,000 crores of revenue over the next 3 years. So clearly, disruption in the paint industry is what they are aiming for. Moving on to their real estate arm then, Century Textile, where they say that they are aiming to become one of India's top 3 real estate developers, and they already have a project pipeline of about 45,000 crores over the next couple of years across 4 metro cities. Moving on to their metals arm then, Hindalco, where Hindalco's wholly owned subsidiary Novelis has already filed for an IPO in the United States, and they have expansion plans both for their domestic business as well as for their overseas business via Novelis. Moving on to a couple of other businesses that they are into then, and first up, cement major Ultratech Cement, and the acquisition spree over there continues. Remember, they acquired Kesoram Industries in November last year, and they are aiming to increase their capacity to 200 MTPA by FY30. So they are aiming to increase the capacity through both organic as well as inorganic route, and hence they continue acquisition spree. Moving on to Vodafone Idea then, their telecom arm, where promoter group continues to infuse funds. They raised up to 45,000 crores over the last few months, and promoters continue to infuse funds in this telecom arm of Aditya Birla Group. Moving on to Aditya Birla Capital then, where amalgamation is expected to boost CRAR, which will also avoid separate listing, and as a result of this amalgamation, capital infusion of about 650 crores is expected to happen in this arm. And lastly, of course, Aditya Birla Fashion and Retail, the announcement which came overnight with respect to carving off one of their arms. So clearly, a lot of corporate restructuring announcements that have been announced in Aditya Birla Group across its business verticals.
Well, Atisha, thanks so much for taking us through that. Quite the buzz being made by the Aditya Birla Group over the last few months or years, if you could say that, over the course of their deal wins and other business updates coming in. The most recent one being the demerger of Madura Fashion for ABFRL. With that, let's get a move on then and, well, talk about the temperature, because it's going to be a warmer summer for 2024, as the IMD has forecasted a scorching summer led by prolonged heat waves, which in other way is a boost to the consumer durable space, as Nilesh Gupta, the managing director at Vijay Sales, says that they're expecting a healthy set of growth numbers this year. So let's go across and listen into what he had to say.
Now this year, as per the IMD multi-model coupled model forecast, it shows that most parts of the country are likely to experience above normal temperature during the season, April to June, as well as April, except a few areas of Northeast and some pockets of Northern Northwest India and along the West Coast. Otherwise, almost all parts of the country we are likely to get above normal, both maximum as well as minimum temperatures. Once we say that this is being an El Nino year, generally El Nino year, it has been seen that we get above normal temperature. So when you have a temperatures are likely to be above normal, we also likely to experience above normal heat wave days over most parts of the country.
I think this year we are in for a good sales. So what we expect is this year, the way things are spanning out, the way prediction is there for heat waves to be of 15 to 20 days, we should see an upward of at least 20% growth this year over last year. And if things fall in place, it could be a little more also. And for the first time in so many years, I'm feeling if this is what is going to happen, then possibly during the fag end or maybe a little over, we may see some shortages also happening of these cooling products.
All right, that's the cautious advice coming in from IMD, but then of course it is a good news for corporates, and stocks like summer coolers and other stocks from this field were certainly buzzing today in trade. Let's go ahead. There were more from the business update side. M&M Financial registered its disbursement figures, and there were a couple of other stocks which were in news today. Gaurav has compiled a list for us. Gaurav, let us know which all stocks have you taken.
Right. So first let's talk about M&M Finance because we have got monthly update from the company, and as per the update, disbursements have gone up almost 9% on a YY basis in the month of March. Talking about Q numbers, this number has gone up almost by 11% on a YY basis for the quarter itself. And lastly, if we talk about the asset quality, that has improved a lot. So stage 3 assets and stage 2 assets have improved somewhere, and that is why we have seen a momentum coming up in the stock in today's trade. Let's also talk about CAMS because the company has now got some attention from investors. And why is that? Because IRDAI has now mandated insurance companies and insurance policies to be on the electronic form, and company has one of the subsidiaries which actually handles the electronic form of the insurance policies, and that is why this stock was in positive today, and we saw this was up almost 5% in today's trade. Let's also talk about Sterlite Tech because the company recently won an order worth 900 crore rupees, and this order is basically for providing optical solution to a leading service provider in the country. And with this order, now the company will expand its presence in over 20 states, and it has now almost 15,000 kilometers of the network. And on back of this, we saw this stock also reacted positively in today's trade. Let's also talk about Ion Exchange because this company also won an order worth 250 crore rupees for a desalination water unit in North America. And on back of this news, this stock was also up almost 3% in today's trade. And lastly, let's also talk about Ashapura Minechem because the company said that Republic of Guinea is actually in process to initiate new norms for streamlining mining, and because the company has exposure in Guinea, this is going to impact companies overall business in the month of March, and that is why we saw this stock was down almost 5% in today's trade. So all in all, on back of the news, we will definitely keep an eye on all these stocks and see how they perform in the days coming ahead as well.
Alright, Gaurav, thanks so much for taking us through that quick list of all the stocks that made big moves in today's trading session. But let's move on to an 18-hour exclusive now, and we learn from reliable sources that the rate rationalization under GST is the priority for the new government. For more on this, we are being joined by my colleague Prakash Priyadashi, who has more details. Prakash, take it away.
Yes, we are learning from our sources that comprehensive rate rationalization under GST is likely to be on top of the agenda for the new government and the GST Council in the financial year 2025. Sources are informing that the reconstituted GOM on rate rationalization likely to hold its first meeting soon after the Lok Sabha election. Sources are informing that some important provisions, proposals are there that is going to be considered by the group of ministers. Along with that, sources are informing that the mega rate rationalizations has been planned under GST in order to increase overall GST collections going forward. We also given to understand that measure of some slabs are also being chalked out, primarily 12% and 18% slab likely to be merged. However, there is least possibility to tweak 28% GST slab it holds, primarily sin goods and luxury items. Along with that, sources are also informing that the compliance-related reforms, along with that process simplification would be a priority for the GST Council going forward. Finance Ministry has set a target to achieve average monthly GST collection of rupees 1.9 to 2 lakh crore on back of multiple reforms measures that has been taken along with the proposed rate rationalization going forward.
All right, thanks very much, Prakash. Keep an eye on this developing story. On this note, we wrap this special edition of Your Trades. Thanks so much for watching. Stay tuned for more updates.
If you like this video, then like, share and subscribe to ET Now.